Morning. Paul Georgie from Allendale. It's August 7th, Wednesday morning, and grain market's been pretty choppy here overnight in a very narrow range, and you could almost call them quiet at times. The news is pretty much non-eventful as traders are trying to get position for this USDA report on Monday, or next Monday morning, and the 14th at 11 o'clock. The trade estimates are out. We've got some, the trade seems to think that we will increase corn yield on the USDA report from 156.5 last month to 157.7 this month, which would put ending stocks at about 1971. And that's larger, about 30 million bushel larger than what the USDA had in July. On the soybeans is where the variation comes in. The trade expects that we will lower yield about a bushel an acre there, and they're taking about 82 million bushel off of the ending stocks from nearly 300 to down to 233. So that could be friendly to the soybean complex, especially since we've seen the sharp sell-off here in recent weeks. So we'll be watching that very closely as we move closer to the USDA report. China is still expected to sell about 500,000 tons of soybeans they've got in storage. That has caused some pressure in the soybean markets in China here overnight. Ethanol plants looking for some corn. Several ethanol plants have raised their bids anywhere from 2 to 10 cents yesterday, trying to pull some corn away from producers. But again, producers are just closed the bin doors and not willing to sell grain at these reduced prices, especially when compared to just a couple weeks ago. In the soybean complex, basis there continues to be firm as well. Several Iowa, Minnesota plants have raised their bids on soybeans anywhere from 20 to 60 cents, trying to get this last bit of beans away from the producers, and not very successful. They're very limited movement from what we understand, and the crush margins continue to narrow as beans or the meal continues to deteriorate. So real tug of war there as we go into the final stages of this marketing year, and the few weeks and months here before we get new crop soybeans and new crop corn available to these facilities. In the livestock, cutout values were higher for a change yesterday. Choice up 71, select up 36. Pork cutout values were up 79 cents yesterday. The feeder index also was higher, up 20 cents, up to 149.79. The processors of pork continue to need supplies of hogs as we go into the weekend. It seems like they're wanting to make up for this rolling holiday that many of the facilities had on Monday, so they will be putting together a Saturday slaughter and creating some demand for hogs this week. The cattle trade still at a standstill, but we did see 60 more deliveries in the against the August contract last night, and 50 of those that were delivered the day before were retendered at the discount. So cattle feeders are, especially in the South, are willing to deliver against the futures contract, as the cash market there has only traded at 119 last week. So there's a couple dollars advantage and reason to do it. So a lot of things going on. We got this report coming up on Monday. We'll be watching that closely. Stay tuned to Allendale's research. You can get the Allendale Advisor Report and get all the details ahead of this report, and you can get a free trial on that by just going to our website or calling. We'll get you set up. You can reach us at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.